Good morning, traders. It is Wednesday, January the 8th. Taking a look at the charts this morning, we don't really have a whole lot of price action going on. We've got stocks and bonds trading a little bit lower this morning, along with precious metals. Really, the only sector really showing a little strength this morning, more or less energy, natural gas, and crude oil trading a little bit higher. Now, taking a look at the recent price action here in the SP 500, if we just zoom in a little bit, you can see here we've had a little bit of a consolidation after the strong holiday run up, and more or less it happened on light volume. Let me just recap on the volume here. More or less we had a strong move to the upside. Again, we had some news there with the Fed, created a pretty sharp reversal there. Started to run away on declining, very light volume. And again, light volume favors higher prices. It requires strong volume for the market to move down. So that is why you typically see during light volume holiday days, you'll see the market drift sideways or higher. Simply, it takes volume to sell prices down. There is a natural tendency for people to be buying shares and accumulating, so you really do need to have strong volume that can overcome that natural tendency, that trickle of buying, and actually drive prices lower. So anyways, what we've seen this week is higher over the last couple of sessions. We've seen elevated volume, more or less regular trading volume, and again we've seen volatility start to come in with some profit taking. So strong run up, starting to see some profit taking consolidation here. Looks as though it's trying to form a little bit of a basing pattern. We've come down, we've pushed to multiple new lows. It's kind of had a run up yesterday, and it's consolidating up near resistance. If this could easily continue to move higher, and I do feel as though the equities market could have another thrust to the upside before we actually see a more significant correction. That being said, I have a feeling we could be doing something very similar to what we saw here, and it feels as though we're trading somewhere right around here where we could see a pop in price, come back up, and we could actually see a push to a new low and some pretty strong selling, creating more or less a three-wave correction. One, two, three. Three-wave correction usually sets the market up for another leg higher. So far we've only had one pullback. This could be the consolidation, and we could easily see it come back down to the 1800, which is this high volume. You can see these blue bars across here, and these previous highs, you just bring that straight across, you're right around this 1800 area where these previous highs happen. So that's kind of what we're looking for, and if we do get more of a pullback, we'll be getting long in the equities market. The trend is still up. Yeah, the market looks a little bit overbought to the upside, but in a bull market, this can stay like this for an extended period of time. So really, we're looking to still buy on the dips until the trend really breaks to the downside. Then we'll be looking to short any bounce. Now, taking a look at energies, let's just look at crude oil first. Here is the 4-hour chart of crude oil. You can see we've come down to these long-term, these red support trend lines. This is off the weekly chart. We're starting to see some stronger volume down here. It's starting to hold ground. Well, ideally, we'd like to see the price flush out. We see a strong sell-off and a strong comeback near the end of the day to close firmly on the session. Let me just zoom in a bit, and that would give us a nice reversal candle to the upside, and we've got nice potential for price to quickly run up to the the 96 area. Could consolidate, and it could easily run all the way up to around the 100 area again, and that's really price ping-ponging between these larger ranges, these large more or less resistance and support trend lines. Now, taking a look at natural gas, here is the 4-hour chart of natural gas. Now, again, I use the 4-hour chart because it's very similar to the daily chart. You get to zoom back about just as far, but you actually get to see some price action in between. You get to see some intraday volume and price action. So it's kind of almost like a hybrid of a daily chart. Overall here, looking at natural gas, I've been pointing this out for a while. We've had this extended run. Looks as though we're starting to get possible head and shoulders forming. This shoulder here it looks very much like a bearish shoulder. It looks more like a bear flag, a move to the downside. It's been ping-ponging around in here, forming a little bit of a bear flag, and a downward move will bring it somewhere down to around the $4 mark, which is also this breakout zone back here. So again, we're going to have this neckline across here. If it starts to break down, it could be a very nice quick drop down to the $4 mark. Now, I will be looking for a possible short play here. Yesterday we actually saw a strong pop in natural gas, and it actually reversed back down. We may be getting short and take a stab at this with a very tight stop above yesterday's previous high, because this does have some nice downside potential. And once it starts to fall, I think we could see it fall fairly quick, and it may not consolidate near this neckline. It may just pierce right through it and continue to move down. So I'm keeping my eye on this possible head and shoulders formation that's forming here. Now let's just take a look at the dollar index real quick using the UUP ETF. Overall, with the what's going on with easing, how they're cutting it back a bit, I think we are seeing the US dollar do something very similar to what we've seen in the past. You see a very long consolidation here. Eventually we're going to see a pop in price, and that could put some pressure on commodities still. But overall, the US dollar this year or last year in 2013 really didn't provide any insight at all as to which way stocks or commodities were going. So that being said, the UUP is more of an individual play at this point until it shows some type of relationship directly with the price of equities or commodities. Last year it didn't. So more or less the UUP is going to be treated more as an individual play. So there is potential for it to have a nice strong rally going into 2014, and I think it could be building a base here. Now taking a look at bonds real quick. Again, 4-hour chart of bonds moving back several months. Bonds has got this nice pattern that I've been talking about for a while. Strong move to the downside. It's had these multiple bounces, and these are panic sell-offs. These are just waves of selling, of fear, and then we had a nice strong rally to the upside. Came up, tested these previous pivot highs over here, where the volatility started to pick up, and now we've seen it continue to kind of fade away and just drift down. Now this is a very bullish pattern. The prices can continue to still fall and make new lows. But the way that this is falling here, it's not volatile, it's not waves of selling, it's just a grind of people unwinding their positions, the last of the bunch to get out of bonds. And eventually we're going to see this likely have a very strong move to the upside, probably consolidate, and then eventually take off. And again, this will be when the equities market rolls over and goes south. We're going to see money pile back into bonds and move up, and when the SP 500 will sell off. Now taking a look at precious metals. Here is the gold chart, and more or less still in a downtrend. The overall bias is still selling pressure, still moving down, and more or less we came right up into resistance right through this key pivot zone. And yesterday morning I was showing how this momentum was starting to roll over, and we're starting to get some chop. Very similar as what we saw in silver, and we actually saw some selling yesterday across the board for gold, silver, and miners. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.